paper at least, we have one of the quieter weeks for macroeconomic news ahead of us, although do watch out for any potential kite-flying exercises and leaks regarding the autumn statement that's due on the 22nd of November as that event draws closer. Any such tittle-tattle aside, the main macro feature of the week is likely to be a weekly dataset that sometimes gets lost amid the noise, but it's no less informative for that. And that is the US weekly initial unemployment claims numbers from the US Bureau of Labor Statistics. They're due for release on a Thursday, as usual, in this case the 9th of November. A year ago, all of the talk was of a US recession and interest rate cuts in response in 2023. Such forecasts have proven inaccurate, as forecasts are wont to do, and although economists, politicians and investors have remained on a state of alert, the US jobs market has remained tight. This can be seen in the weekly initial jobless claims figure, which is hovering around the 200,000 mark seen before the pandemic when the American economy was chugging along quite happily. If you step back and look at past recessions, those that started in 1970, 73, 80, 81, 90, 2000 or 2007, a steady climb in weekly claims to around the 300,000 mark was one sign of trouble ahead. So if there is to be a slowdown in the US anytime soon, or indeed ongoing strength for that matter, then the weekly dataset could prove to be a useful signal either way. On the corporate front, we have a much busier week ahead of us, with almost 1/6 of the FTSE 100 scheduled to release full year or first half results or a trading statement. A good number of mid and small caps are slated to update their shareholders too, and names which may be worthy of further study include the following, at least pending any late changes to release dates: Unite, Beazley, Persimmon, Direct Line, IWG and Hilton Food on Tuesday the 7th of November, Marks & Spencer, Hiscox, ITV, JD Wetherspoon and Secure Trust Bank on the 8th, AstraZeneca, Flutter Entertainment, National Grid, 3i, B&M European Value Retail, Auto Trader, Taylor Wimpey, IMI, Endeavour Mining, John Wood, Lancashire WH Smith and Wizz Air on the 9th, and Renewy and Young & Co.'s Brewery on Friday the 10th of November. But the company which could just cause the biggest fuss in the week ahead is Associated British Foods. The owner of Primark, Twinings Tea, British Sugar, Allinsons and Sunblest is due to release its full year results for 12 months to the end of September on Tuesday the 7th of November. A year on from the chaos in the pension, mortgage, stock and gilt markets, thanks in the main to Trussonomics, shares in AB Foods are up by some 40% over the past 12 months. The low base for expectations has helped, but a lot of retail stocks have done well in 2023, helped by a retreat in oil and gas prices, at least until recently, energy price subsidies, strong wage growth and low unemployment. Upgrades to earnings expectations during 2023, most notably alongside June's third quarter and September's fourth quarter trading updates, and a £500 million share buyback have also helped AB Foods shares. As of the 11th of September, £442 million of that buyback programme had been completed, by the way. The benchmark for these full year results will be the guidance given alongside the September briefing when AB Foods forecast a slight increase in adjusted operating profit for the group as a whole in the year to September 2023, a strong increase in adjusted earnings from food, and a 15% increase in retail sales, 9% on a like-for-like basis, with an operating margin of around 8% for Primark. So, in terms of the headlines, watch out for the following, where any guidance for fiscal 2024 may well be more important than the fiscal 2023 numbers. First up, sales, well, they're expected to rise 20% to £20 billion before advancing 5% to £20.9 billion in the new financial year to September 2024. Earnings per share are expected to reach 138p against 89p on a stated basis, before advancing again to 159p share in 2024. Thirdly, the dividend is expected to reach 48p against 43.7 pence a share a year ago. Note that management may also unveil plans for additional distribution of what it calls surplus cash. AB Foods did offer a special dividend of 13.8 pence a share in fiscal 2021, on top of regular dividends worth 26.7p a share, and there's that share buyback. Analysts will then dig into the divisional trends by sales, profit and profit margin at grocery, sugar, agriculture, ingredients and retail, with retail the area that normally grabs the most of the attention. For 2024, AB Foods has already suggested that profits at sugar would increase substantially, and that Primark was also expected to show a marked improvement in profit margin. As a final point, watch out for an update on both the Primark store expansion plan in the UK and particularly overseas, and also on the click and collect trial that's now running at 57 stores here in the UK and is being extended beyond kids' wear to include women's wear. I hope that you and your families are all well and in good health. Thank you for watching, and I look forward to seeing you again next time.